Today, it's going to be a good one. I'm going to have Matt Hougan on, so you don't want to miss it. My name is Paul Barron. Welcome back into the show. Let's get into it. I do want to thank our sponsor, and that is Coinbase, where you guys can get into your crypto journey. Very easy to set up an account over there. Future of Money is here. And actually, they have a new program, and that is that right there, a credit card that you can get into, early access, up to 4% back on every purchase. So that in itself is kind of a built-in savings account. Check it out. Use our link down in the description. I want to lead off here before we get in with Matt Hougan, a clip, because a lot of people are trying to figure out how and why this market dip started to happen and what is it going to look like to come out of it. Let's go to that clip.
The macro hedge funds, you ask how they really trade crypto, they use it as a release valve for macro events, right? How many times have you seen a geopolitical situation happen on a Friday night post the close, right? And then, by Monday, everything's settled. Bitcoin has gone up 5%, down 4%, right? Yeah. By tokenizing securities and equities, you open up the world of 24/7 trading. Nonetheless, I think there's definitely demand there, for sure.
All right, that was Usman Naeem, head of assets over at Coinbase. And I want to bring in Matt Hougan. As you guys know, there he is, Matt Hougan, CIO of Bitwise. Great to have you back on the show.
Glad to be here, Paul. Good to see you.
So when you look at what Usman was talking about, this 24/7 volatility nature of crypto, you see these wild swings on major assets. You look at ETFs and you look at securities. Do you think we could see that in the future flowing into how strategies are being done on crypto itself, translating over to traditional markets?
Oh, absolutely. Crypto is sort of your window into the future. It is showing you what 24/7, 365 trading means. It means you can react instantaneously to events. But one thing that I think people need to realize is it doesn't repeal human nature. You see a lot of these big exaggerated moves, Paul, on the weekend when the markets are less liquid than they are during the week. Right. And that should be familiar maybe to traditional equity investors who are used to seeing exaggerated moves in after hours trading. As an investor, you should look at those moves skeptically. They don't necessarily reflect changing fundamentals in the space. For example, there's nothing that changed fundamentally about crypto this week. The government's still printing debt. The existing financial infrastructure is still extraordinarily slow and inefficient. What happened was the market entered its illiquid period on Sunday night, and there were some cascading liquidations. It's just a feature of this market. You have to be ready for it.
For sure. Jim Cramer, he's getting a little cold feet. I think I don't know that he's ready, or maybe traditional markets are ready for this. So the fact that we could see these kinds of wild swings around a 365 24/7 market that's coming down the pipeline. So I think they're going to have to get in the game and understand this is maybe the future now. So here we are.
Yeah, that's right. I mean, you have to change your ecosystem. You need traders who are available to react 24/7. You need algorithms that are able to react 24/7. You have to understand liquidity and illiquidity periods. But there's no turning this back, right? The long-term future is 24/7, 365 global trading across all assets. That's what the world wants. That's what the world will get. Crypto is just giving you a glimpse into what that future means, the good parts and the bad parts, the release valve, and maybe the Sunday night illiquidity. And it's good to train up on that while crypto is still young.
Yeah, for sure. Well, speaking of kind of this direction of where we're going, I'm looking at your spot ETH ETF right here. Continuing to climb. So there you go. That's a good example. Just, if you're looking at hodling and you think about long-term investment strategies, this is kind of the structure I think a lot of people are looking at right now. When you look at where ETH is, where Bitcoin is in terms of ETFs, and then the potential of a lot more ETFs. I was looking at your article right here, ET Palooza. I love this one. What do you see coming down the pipe that's going to move the needle in a big way for investors, especially around these ETFs?
Yeah, there are probably two things to look out for. One is what I mentioned in this article, which is the SEC has cleared the way for a large number of crypto ETFs to launch. Right now, we just have Bitcoin and ETH. I suspect in a few months, we'll have ETFs on a dozen assets. In 6 months, we may have ETFs on 25 assets. So you're going to have this ETF exposure to a large number of assets. The other thing that's happening behind the scenes, maybe fewer headlines, is that national accounts are finally approving spot Bitcoin ETFs. So folks like Wells Fargo, Morgan Stanley, Merrill Lynch. So you have this second wave of growth that I think we're going to see in those major assets, just when the minor assets hit that first wave of growth. Both means more investment capital coming into the crypto market. You know, the World Bank says that institutional and professional investors control $100 trillion in assets. If you think they're going to end up 5% allocated to crypto, that's $5 trillion that needs to come into the market. That's actually bigger than the entire market cap of crypto. The market cap of crypto right now is just a shade under $4 trillion. So I think over the next 10 years, you're going to have multiple trillions of dollars of capital that needs to allocate to crypto. The ETFs have done a little bit. They've done exceptionally well, the fastest growing ETFs of all time, but there's still maybe just a few toes in the water, Paul, from where we're going to go.
Yeah, you think about toes in the water, this is kind of an interesting trend right here. Google Trends, crypto ETF was the search term. You can kind of see it, guys. This is pretty significant as we start to move into it. The early stage of the Bitcoin ETF, I think, helped kind of dive into that. But if you look at just where this is going, Solana is really the breakout query that's going. Obviously, you mentioned the Solana ETF as being one of the potentials here. Break that down for me. Do you think that it will be the most affected by these digital asset treasuries? How does this play out for you guys?
Yeah, it's a great question. You know, I wrote another piece called Solana Season. I think Q4 is setting up to be an exceptional period for Solana. You have the combination of three ingredients coming together. One, you have the expectation of a large number of Solana ETF launching. That means flows into those ETFs. There's the article. At the same time, you have these digital asset treasury companies run by some of the biggest names in finance, right? Kyle Samani of Multicoin. Dan Moorhead of Pantera. These are OGs of crypto launching Solana-specific strategies. That's more buying of Solana. And then at the third point, you just have this explosion of interest in stablecoins and tokenization. Some of that's benefited ETH. The other major beneficiary is Solana. You put all those three things together, it's one of the best setups for a crypto asset that I've seen in the last 5+ years. I think it could be, if they all come together, an extraordinary Q4 for Solana.
Well, I think that's what everybody's looking at, and timing-wise, you're exactly right. I just look at the ETH reserves right now continuing to climb up. If you just look at the explosion that we've seen in terms of the digital asset treasury side of things, Solana, Avalanche is coming out to market with one. Do you feel that the DAT companies have a little bit more effect on the current price of the asset? I was looking at just percentage of supply held right now by publicly traded company. I'm looking at Solana, obviously had that big jump. We've also seen just situations with ETH and Bitcoin that have continued to go up. What would be your opinion there?
Yeah, I think of it sort of like the tortoise and the hare, Paul. The DAT companies are like the tortoises. They jump into the market, raise debt, and buy $100 million slugs, $200 million slugs, $500 million slugs. The ETFs are more like the hare, incrementally each day buying 10, 20, 30, 40. Which matters more? It depends on your time frame. Ultimately, the ETFs are going to be the bigger avenue. But these digital asset treasury companies can do step function purchases that really dictate the market. I think keeping that tortoise and hare analogy in mind will help people think about these two approaches.
I was noticing this tweet of yours, Bank of England proposing capital controls on citizens. This is crazy. I had missed this, to where they would limit the amount of stablecoins that you potentially could hold. You're kind of, is this a bullish sign or maybe a bearish sign? I think this might be a bullish sign, actually. What's your opinion on this?
It's a bullish sign. It means that they're worried enough about stablecoins, which, remember, 2 years ago, you couldn't get anyone in a suit to take a stablecoin seriously. Okay. And now Bank of England is worried enough that they're thinking of putting fundamental restrictions on the economic freedom of their citizens to access these things, because it might, pull money out of the banking sector that's taking advantage of them. It's an incredible sign of weakness. Ultimately, it won't stand. Walls can keep in water for a while, but it will find ways to spill out. I think it just shows you how powerful this stablecoin narrative is, that it has the Bank of England quaking in its boots. I mean, that is a big step from where we were a few years ago.
But yeah, huge. And if you just look at what's happening in Europe, I anticipate we're going to see a lot of people kind of moving in that more decentralized fashion, especially around trying to hold, wealth, which is the key here for sure.
That's right.
Yeah.
We've been trapping people in their own geography and forcing them to have no choice in their currency. Bitcoin started to break that. You didn't need to be government based. You could hold something that's independent of that. Stablecoins are another way. You don't need to be local currency. You could be in the dollar, which is the cleanest dirty shirt in the fiat currency world. From my perspective, more choice is better for investors. It's empowering for individuals. And these sort of last gasp efforts from people like the Bank of England shows you that the time is now, that they're really ascendant, that they're globally important.
Speaking about the time is now, we've been doing some research on Bitwise. So I'm looking at returns, which has been, absolutely amazing. And then I look at the fund holdings here, and you look at just the top 4 assets there: Bitcoin, Ethereum, XRP, Solana. Cardano's even got a position, Chainlink, Avalanche. With everything that's happening with AVAX, what we're seeing in general with some of these assets, is it time to rebalance on this, or do you feel, hey, no, Paul, this is the lock, we're going to go with this?
Well, I love the question. The funny thing about looking at this chart, this list of assets in our index, the Bitwise 10, is depending on what day you ask me, I might be more excited about one asset or the other.
Yeah.
The way I think about this portfolio for most investors is that this is your core. This is a market cap weighted portfolio. It owns assets in direct proportion to their size in the market, and that's your core. And then most people will want a satellite that lets them overweight. You may look at what Scaramucci is doing with the Avalanche Digital Asset Treasury Company and say, that's going to be hot. I want to overweight Avalanche. You may look at what's happening in Solana. Hougan says it's Solana season. I want to overweight Solana. We love that. But I think that index, which is like the S&P 500, can be your core, and then people can over and underweight from there. It's what I do with my own personal portfolio. I think a lot of people will as well.
This is like the Matt Hogan's 20 greatest hits today. I'm looking at another one of your tweets here. Gold over silver, and then Bitcoin over gold. Now, at the same time, we just had one of the top guys, I think, in gold out there, Andy Schectman. He was on the show last week, and he and I were talking about it. He went the other direction. He went the direction of silver, because he was saying this 45-year breakout was absolutely insane. How would you position right now with silver pumping? Gold, sure, yes, all-time high. How would you play this out? I'm just kind of curious of your transition on assets there.
I love that question. It goes back almost to what we were talking about earlier. It's a matter of time frame. I was speaking from a history of money perspective. I read a great book, The Secret History of Gold. It talked about why gold was money more so than silver. One of the primary reasons was it was more dense and easier to move. You could store a lot more wealth in a small amount of gold than you could in silver. Put $1 billion in silver, it might sink your ship. The reason Bitcoin over gold is you can store an infinite amount of wealth in no space. With Bitcoin, you can move it around at the speed of light. That's why I think Bitcoin is ultimately ascended, ultimately will be a bigger asset than even gold, which will remain bigger than silver, because it's better on those core monetary statistics or characteristics. From a short-term perspective, I don't know, silver is more exposed to economic trends than gold and Bitcoin. I'm more worried about economic growth than I am about rising interest in fiat hedges. Therefore, I lean more towards gold and specifically towards Bitcoin. But look, I think all of those hard assets, I think the tide is rising on all of them. I think investors are fed up with what's going on in fiat currency. You see a bid for gold, silver, Bitcoin, other metals. I think that is a rising tide across the board.
Well, we haven't seen tokenized silver just yet. I'm looking at SLV there. This is just the ETF. But if you look at XAUT, obviously Paxos G, which is gold on Paxos, all of these are going to open up in terms of access to a lot more traders. So what is your theory on tokenized silver? Do you think Paxos is going to pull the trigger on this, or do you think we may get another player coming in?
Oh, great question. I'm sure somebody's looking at it. Look, all of those charts are screaming that investors want exposure to these hard assets, and they want them 24/7, 365. I think we're going to tokenize everything. So who's going to do it? I don't know. Maybe it's Paxos, great company. I think they'll be successful in that market. The thing for investors to look at it, 30,000 foot view, is each of those assets is up and to the right. They're telling you something and they're telling it loudly. The thing that unites those stories, the best looking charts in finance, are all hard assets. They're all doing that. What they're telling you is there's rising concern about fiat debasement. That I think is going to accelerate. And pick your horse, Paul, but they're maybe all going to win at this derby.
Well, it's good diversification, I think, in general. You look at what a lot of cash positions are trying to do right now, to your point, is the debasement side of it. If you look at that argument, you need a lot more alternatives because it does start to get away from the US dollar, at least to a certain extent. Speaking of diversification, I'm looking also at the Web3 side of Bitwise Web3 ETF, and I'm looking at top 10 holdings here. Roblox catches my attention very quickly just because they've continued to have really positive news. Do you think they are going to enable Web3 functionality on Roblox?
I do ultimately. That's been the direction of that business since its founding, right? It's sort of been occupying that world. It understands that ownership is important. It understands that decentralization is important. I know a lot of people look at something like that. It's like Roblox, a gaming company at the top of a Web3. Remember that if you look at internet investments, one of the best performing internet investments of all time, far better than, say, Google over the last 20 years, has been Netflix, right? There are different ways to monetize these new capabilities. There were different ways to monetize the internet. There are different ways to monetize Web3. Gaming is one of them. Companies doing extraordinarily well.
Do you? What are we talking about, Matt? Is it next year? Maybe 27? What do you feel like? I mean, do you think that we're going to see companies like Roblox barreling toward making some major decisions just because of what's happening in the administrative side?
It's a good question. We're clearing the regulatory roadblocks. It depends on the pathway toward that. These things always take longer. The old quip about people overestimate what can change in 1 year and underestimate what can change in 10 years. I think that applies here. But the market recognizes it before the fundamentals arrive. That's the way markets work. And so I think you can look at the performance. If you pull up a chart of that ETF, BWEB versus the NASDAQ 100 Qs over the last couple of years, what you'll see is that the market is recognizing the performance of these extraordinary companies. And when will it show up in the earnings and the new announcements? Again, it'll take time, but it's starting to move in that direction.
Listen, there is a gauntlet being thrown down by Mr. Kevin O'Leary, and the gauntlet is he thinks he's going to win in this new area of tokenized assets that are mostly collectibles. You look at Secure, which is their collectibles thing. Why wouldn't Bitwise launch something like this? I'm thinking you guys could do this.
I love it. I love the suggestion. Look, Bitwise is looking increasingly at what we can do on chain. I will leave it at that. I don't know if I'm going head to head with Mr. Wonderful, but
Wondershine, that's what he's claiming. I got a clip for you just to understand, because you got to listen to this clip. It's a good one here, Matt. Let's go to that one.
I want an index. I want El Supremo, grown men weep when they see them kind of cards. And since that news broke, I didn't realize how big that news was going to be. Is that where you get the majority of the appreciation? Turns out that's true. I don't want any crap. I want El Supremo. I'm going to release this index pretty soon. I think grown men are going to weep when they see this. Bring on the competition. Bring it on. Just try. It's going to become the gold standard. It should be valued daily, just like a portfolio of watches is. I don't want to be that rich asshole that hoards these things. I want people to be able to see them. And just like I share my watches. I always have 2 watches on. I share them.
All right, so there's O'Leary. You can kind of see he's having fun with this, getting into an index with Wondershine. So I'm just wondering, I think we're going to see more of these coming out, especially with collectibles, the ability of on-chain assets. RWAs are going to be a big part of this in the future. So I'm thinking Bitwise is going to be here, man.
I love it. I love it. We'll see. I got to get my first watch. I'm watchless. So he's got me 2-0 on that one.
All right, Matt, listen, it's been great having you on today. Thanks so much. We're watching Bitwise very closely. You guys are making some moves, so thanks for coming in. I appreciate it.
Thanks, Paul. Appreciate it.
You bet. See ya. All right, you guys, get into the Diamond Circle if you're not in right now. It's a great place to get more content from us. We do some additional research over there that you guys can get, and it's super easy to join. We always leave a link down below in these videos, so click that link. It'll take you over to the website. Join. It's free, and then, of course, you'll get another email coming out to you. It kind of drops some of this stuff. Also, if you're not following me out there on X, do that. It's @PaulBaron. We'll catch you next time right here on The Paul Barron Show.